All right, guys, we got a highlight and a half. First of all, it's about 10:45 Central, and I've been saying this the last hour or so. The longer it takes to rally from this big bloodbath of a down day, over 100 points in the S&P, the better chance that we have of doing what we're doing right now, and that is creating, hey, if you can't attract buyers when you're 100 lower, at some point you're going to have to go another 50 lower. So it becomes a bloodbath. So the important highlight today is you can't add to losers. You can't take bigger risks. You have to cut your size if you trade multiple contracts. If you only trade one, let's say S&P, you got to go into the micro, trade a few micros or something, because you have to naturally increase your risk because of the volatility. So you have to cut your size so even things out. You're not going to be able to get out with 6-tick losers. That might be 12-tick losers. So you may have to cut your size in half. So that's a piece of advice I can give you. The second thing, when markets are volatile, it's really important that trades go your way even sooner rather than later. All right? Because if you hang on to a trade that's a couple points against you, it could go 4 more points against you in a heartbeat. You look at right now what's going on. This is the open pretty much, 32.75. We've come all the way back from a, 25, 30-point rally after the open. It jerked around and everything else. But at some point, if you take a look at this, it just screams through the bottom of these consolidations, and it got fast in there. We talked about how this move right here, when it got retraced too much, like 100%, that in order to go back up, it was going to have to chop sideways a while. But it was bearish. It went from bullish to bearish in just this time frame once this came all the way down to here. And the fact that you can get through these and you had some downside targets, and now you got the open, they're not going to – I mean, they might hesitate here at the open, but they're going to smash right through it, make new lows, and you're going to look up and see a cash Dow that's going to be down over 1,200-1,300 points, most likely. If you can't go up – listen, when there's lower prices, substantially lower prices, it's the person waving for buyers. Come on, I'll sell it for you at 15 instead of 20. All right, how about 10? No buyers, 5, right? And there's that pause. We've had 2 hours here since the opening 100 lower to take back some of that, slack. And all they went is to what, 60 even? So the highlight, though, that's actually not the highlight today. The highlight I want to talk about is going from being right to being wrong and doing it quickly. The faster price moves, the faster you have to react. I don't care what your time frame is. Your time frame could be long. You still got to react a little faster in more volatile markets. But right in here, I had a feeling that they had a WHO press conference started around 9 Central. I said that this guy is going to come on and he's going to talk something that's going to create a relief rally, not for markets, but just the overall pulling back on the word pandemic. And he did that. And it was a nice upside opinion from the mid-50s to 60. However, I thought there was more. We're going to be we can get into trading 70 because they're going to continue to be a little bit optimistic in this press conference. Goes back to what I say. When you read the real time, you've got to say, well, where did this move start? Pretty much down in here, right? Where did it top off? Around there. You don't know that when it's up there, but you know it when it comes off a little bit. And so now from circle to circle, you have the move. If it comes back 50% and starts to re-rally, all right, we can get into the 60s, 65, 70 and everything else. But when it comes back down to here, and almost 70% of this rally, then it gets to be bearish again. And you can't keep your horns on. You just can't do it. That does that look like the place where we said that? No, it was right in here. Similar pattern. I knew something was wrong. Similar pattern. It was right in here, about 10 minutes after 9 o'clock. Same prices in the mid-50s. I said this guy's going to be optimistic. He was. They ran it up to 60. I looked at the fact that this was a swing high. All these were swing highs. I'm like, well, this thing should release to 65 and 70. All right. Started getting bullish and getting people, hopefully, to put horns on inside this first yellow circle. we don't know this is the high until it comes off a little bit. All right. Now, let's look at this. When it comes off a little bit, 50% of this move, and you say, well, Anthony, what do you mean 50%? There's the start of the rally. There's the end of the rally. You know that much as we're in here. This is about 50% of this move up. That could still be healthy to have it re-rally, but you don't want to see it dive down much more than that. And once we got below in here, people that were still holding on to hope, and if they were long in here and didn't get out up here, or didn't get out in here, didn't take profit, which I tell people to do all the time, especially in volatile markets, you could think it's going to 70. That doesn't mean you have to be long your whole package. But right in here, you could see this market, as soon as it went down into here and broke out of this consolidation, what did we say? That this rally was retraced too much to stay bullish. You can't be bullish once it leaks through here. It's okay to be bullish in here based on what we talked about. To even think that we could pull back a little bit and re-rally in here. It's not okay to not change your mind once you get through this yellow line. And before you see this, you got to be, your horns have to get pulled off. You can't necessarily have to be short, but you can't be bullish anymore, at least on this time frame. All right. And then there's no coincidence that the downside continued to be the right side. And there were people that were able to change their mind or execute a bearish bias that they already had. So it's important to read, is this the move that's going to get retraced a little bit and then re-rally and fulfill that dotted line? Or does it retrace it too much? And if, like the owner of my prop firm said, if this market was strong and rallied from 52 to 60, why the hell is it back at 53? Think about that. If it was strong, why the hell is it almost taken back the entire rally? So you could start predicting the next right side with probability when you look at markets and when you fragment charts out that way. But most importantly, in volatile markets, it's not about being right. It's about how long are you wrong for. You could be wrong all day long as long as you cut it short and not be stubborn with it. And I can't underscore this enough. The more price moves, meaning the more volatile it is, the quicker your reaction time has to be, no matter what time frame you are. The quicker prices or trades need to go your way. And the more, I guess, imperative it is you don't hold on to dumb trades, losing trades, bigger losing trades, add to losers, really dumb stuff like that. Because a small losing trade could turn into a bigger losing trade that could turn into a disaster. And it all stems from one stupid idea. Big losing trades and adding to losers and dumb things people do always stems from one stupid idea to get long, let's say. Didn't work, they buy more. Didn't work, they buy more. Next thing you know, it never got them out of these longs, and now it's trading 35 even. They're still in this trade. The best they're going to do is maybe break even with all kinds of emotional energy spent and nerves. So we didn't slice through the open. We kind of held it and bounced there a little bit. The only way I think we rally and have a really great bounce today is if there's some pivotal or positive news that comes down the wire. I'm not 100% at being able to anticipate what that could be because it's one of those when we start getting less deaths reported probably and less cases. But right now, it's been such a didn't want to go long into the weekend Friday. If you remember Friday's highlight, that's what the market didn't want to do. And then over the weekend, it got worse with cases in Italy and Iran and more deaths in Iran came out of nowhere. And they spent all this time, first 2.5 hours of the morning, can't rally. It gets uglier and uglier. So be careful on either side of the mount on the market, long or short, because the price of poker has gone up. So it's even more important to manage your risk before you take it. Be okay with being wrong. Just don't be wrong for long. Cut your size because your risk is automatically going to increase. If you trade a one lot in the ES, you do have options now to trade smaller. It's called the micro. You trade 5 in the micro, trade 2 or 3 in the micro. Whatever you normally trade, you have to cut your size in this volatility. We aren't necessarily going to slow up tomorrow or this week either. Know when you're wrong and when your opinion's going to change before you get emotionally attached to it. And also subscribe to this YouTube channel so you can get notified as we put out these videos daily.